Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima of Kooima Varilek. Livestock futures leaning mostly higher, except for some of the deferred hogs this morning. Hopefully, we can hold on to those gains here as we talk, Brad. The grain futures are mixed. Feed grains lower, soybeans just a bit higher. So let's talk about the cattle market. We had higher weekly closes last week, and the cash news certainly felt better. Have we bottomed the cash, do you think?
I would say yes, and to add a little, thanks for having me on, of course. Add a little bit of that, that weekly higher. It was also a weekly reversal higher. If you remember, last week Monday was a ugly day. Made new lows for the move, and then came back and closed, substantially higher for the week. So that's for you line drawers out there. That's one of those things that people kind of keep track of a little bit, I guess. I think too, to answer your question about the cash market, there was some nice indications up in my neck of the woods here late Friday, with bids improving from a week ago and improving from Wednesday, Thursday, to the point where there was some 184 that was bid. A few guys took it. Mostly it was passed here in my backyard anyway. And, feeling kind of encouraged, also hearing some stories of some short bought packers. In fact, one case where I know cattle that were sold Friday afternoon were delivered already this morning. So that's always kind of nice to hear, where it feels like maybe, Michelle, that the packers used up some of this inventory that he's bought. He was real aggressive when that market was 180, 181 in that range. It seemed like the packer was willing to grab inventory, which I felt at the time was a good sign, but you get impatient waiting for then that market to move off of first base and act like we're going higher, which is exactly what it's acting to me like it is now. And to borrow a tired phrase that I've used with you before, but I think it's very, very real. And that is, when we're this current up here in Iowa, where the farmer feeder is, it gives me some optimism that that's usually a very, very good sign. I think the market, when we started, you and I visited here, we were a little better off than we are now. Now we're back to just barely higher, but the market feels like it's in better shape cash wise and futures wise. I'd like to see December cattle get about 173.50. 179.50.
179, yeah.
Yeah, and we got right there again this morning, 179.37, and we weren't able to get through it here yet. But I think if we would do that, we could, run some stops. Maybe we are through the Goldman roll too, so maybe October we'll trade a little bit better this week.
Yeah, that was obviously an impact last week. Okay, so you talk about the North still being current. Is the South getting more current? Is that why we've seen the disparity between the South and the North start to narrow up here? And will that continue?
The numbers are tightening in both Texas and Kansas, and I'm told particularly in Kansas, and I think that largely was the driver, not because of quality or kind. The last couple of weeks where the South gained on the North, or the North lost more than the South, however you want to look at it, but that big spread did narrow way up to almost par. I think there's a couple of things though, backdrop to that. I think there's less numbers. You asked about being current. I don't know. It's pretty hard to feel like they're super current when you look at the regional weights. You can get those weights by region, and I get asked this question a lot, and I pondered a lot. Why are these weights stubbornly so much higher when it feels like around here you're very current? And that's what the data also would suggest and show. That in fact, the Iowa, the last couple of weeks, the average weights are actually at or below what the average is normal the last 5 years, while Texas and Kansas in particular, the big formula states, are much above. So I don't know, if you put your packer hat on and think like them, is it more efficient for them to kill a 1,500 pound steer or a 1,400 pound steer? When you got tight supply, that is one way to provide supply, right? You got the same number of cattle, but they weigh more now. So beef production stays higher than what you would have expected. Some of it might be that they're chasing grade, needing more days to get the cattle to respond to this choice select spread. And some of it, I know in some cases, I'm told by some of those big yards that, hey, we just think the feeder cattle are too high, so we're going to feed what we got a little longer. So it's a really Texas Kansas issue that's really driving that weight story. We'll see as that time goes on. I think unfortunately we're going to have an industry here where you're just going to get used to this stuff, that the weights are going to be bigger than they used to be, particularly as we go through this next round of tight supply.
Yeah, that seems to be kind of an industry trend. The one thing you didn't mention is lower corn prices, obviously. another reason why we're feeding to higher weights, right?
But got to be, it always is. And Michelle, unfortunately, this, be careful what you root for. If you're rooting for cheap corn, if you're a cattle guy, those two usually end up badly. And, I'm optimistic this morning. Okay. But, if I had a look forward here with looking in the, imagining what could happen here, there's been a lot of yearlings that have been bought for fall, and a lot of those yearlings have very high break evens.
Right.
So the low 190s not uncommon. If we're not, if we're still at say 182 or 3, and you've got cheap feed and it's January, the risk there is we'll be talking a lot about weights, because if we in fact pull the typical deal like we did in 2015, start fighting the market, it doesn't matter how many cattle you got, you'll get in trouble because you'll lose leverage. So I say that tongue in cheek, it matters, but it won't matter nearly as much if you're not current. So let's keep an eye on that. Let's stay current as we go into that end of the first quarter and the beginning of the first, end of the fourth quarter and beginning of the first.
Let me ask you about the funds as well. They're long, about 30, almost 39,000 contracts here, but they've really not jumped in here and pushed the long side of this market like they had previously, with the Fed lowering interest rates now, perhaps this week, and the stock market stabilizing. Is that a reason for them to jump back in and start pushing or not?
Well, it's a start. We got to create an environment where they dare to play. I think these outfits are structured and disciplined, more disciplined than I am. They look at a deal of, well, we're not sure about the economy. Well, we're not sure about the political impact of the election. Well, we're not sure about anthrax, for goodness sakes, 2 weeks ago. Give me a break. Or bird flu or whatever you want to, all the stuff, the minutia. We're not sure what to do in case we'd have a severe recession. That's not very long ago that we were talking about that, the worry about a steep recession. So it's not going to just happen, snap your fingers overnight. I do think if you could get the chart pattern where you get above that 179.50, take out that last high, that would help already. But we need to have a little calmer environment. Unfortunately, I'm not sure if we're going to see that for a little while here. With the tugs of whatever the economic pressure is, and then also political stuff.
Yeah, that's right. It is an election year, remember, folks. Okay, hog market. We basically are starting to run out of gas, it looks like there, and we're running into some bigger supplies. So is that going to kind of be the thing that caps this market going forward? Are we going to start going down?
I don't disagree. I guess I feel like, you had I don't know, the easy part of the rally or whatever. We got way too cheap, in my opinion. And we finally, got that fixed. But, whether we can really take this market another chunk from here, right where the December cattle fail, or December hogs failed, I thought was a really big spot on the chart. If you haven't looked at a chart of it, look at it. That's where we broke out to the downside and collapsed. And then we managed to get our way back up to that again. So that looks like one of those, that looks like a pretty big target. Like maybe that's the end of the move kind of a target. You're right about supply. And when you've got this kind of supply, it's just relentless with these hogs. You got to have perfect demand. And I'm not sure it is quite perfect. At least it isn't domestically. We continue to export quite a bit. But the rest of it is, we just can't seem to even get a pork feature. If you look around, I don't know, pork industry, I feel bad for the guys that are involved, not so much for the corporates that are involved, but, the demand of this, their decision to take this product and want to be competitive with the other cheap meat is to me is questionable strategy, and you're ending up with a product that's limited demand. But now if we go into a big recession, maybe it'll help, but it's hard to root for that, isn't it?
Yeah. Well, we'll see if we hold on to these early gains here today in the hog market. Okay, grains. Soybeans are a little bit higher here. I would assume that's because of the export business that we got this morning. That market, we keep running up into chart resistance around the 50-day moving average. It's going to be pretty hard to take that out as harvest keeps pushing forward, isn't it?
Yeah, I feel like you made a great point. We've had much better demand. China's finally doing what they said they were going to do, buying beans with great regularity. We're priced good in the world market in terms of being competitively priced both on the corn and the beans, and you've actually seen pretty good demand here in the corn as well. So cheap prices do help with demand, and it's very obvious that we're seeing it. The other thing that strikes me after last week is another one of those old phrases that I like to use, and that is, when you whip the horse, he had better run. The news was bearish on corn last week, and they didn't break. So the market assimilates that and says, well, I guess that's what we know now, that this yield's even bigger than we thought, and we don't really care. We know we got a big crop, but it looks like demand is starting to firm up. So now I'm inclined to think that we got the lows in on both the corn and the beans, but I really would caution you, to get us up and out of here, it's going to be a while, guys. I'm afraid that you got all the harvest pressure coming ahead of you. You've got to definitely have a big crop. You got a monster crop where I'm sitting here in Northwest Iowa. So to argue with that, I don't think is worthwhile. That isn't to say we just have to go lower every day, because we know we got a big crop, but encouraged by the fact that demand is starting to pick up, and that should help. We've had a big sell-off, from where we were relatively for the last couple of years. The market certainly is down here where you would think the end user would have an interest.
Right. But every time we get up, Brad, to certain price levels, we get farmers selling that caps the rallies too, don't we?
100%. You got to get November beans on top of 1040, in my opinion. If that happens, I'll get friendly. Otherwise, you sell rallies into it. I think the December corn has showed over and over that you can't get hardly past 410, let alone that 4.25 level. That's really, really important resistance. So there's your markers. If you get over 420 on the D corn, use it to do a little bit of marketing. We can always come back and buy something against it later if that's what your problem is. But hey, with 8.5% interest, I don't see why anybody's going to want to store this stuff. At least they probably shouldn't be. Let's slow down some interest costs, and I think that'll be the motivation. So I think guys are going to be pretty easy sellers.
All right, thanks so much, Brad Kooima with Kooima Varilek. That is Markets Now.